All right, so let's go ahead and continue on with Coffee Cafe, the adjustments. Okay, this is where we last left off. We have just entered in our truck loan. Okay, so there it is, the truck loan, right? We entered in the bill, and now we are scheduled to pay for it. Okay. So again, when we last left off, right, we finished actually the bottom of page 23 here. Now in this case, that's very small space, but yes, you can technically put a transaction in there. For now, I don't think it's super necessary to draw a line, but if you want to draw a line, go for it. Because we're going to be starting on the new page here, page 24. Okay, and we're going to go ahead and finish up the rest. So here you go. So this one says right here that we need to now replenish the petty cash fund. Okay, so this is what happened. Okay, we had on June 23rd, the owner, right, took some money to buy 10 pizzas and 10 sodas plus tax and $25 delivery. Okay, so in this case, paid $187.16. Okay. Then we had Irene go buy a cake, okay, for $23.80. And then we had Albert go buy some streamers, balloons, and some plates and napkins and utensils, right? So there you go, right? And he took $71.82. Sorry, I cannot read today. All right, so in this case, right, how do we replenish this petty cash fund? What were these all purchases were made for? You guys remember? What was on the 23rd?
They celebrate the end of the grand opening.
Good, right?
So they had a family and friends on the house party.
Yes, to celebrate the grand opening of their store. So in that case, right? So in this case, the owner took some money, Albert and Irene took some money. So what do we do to replenish the petty cash fund?
We need to list the expenses for the debit that those expenses belong to
Okay.
from the chart of account, and then the total is equal to the checking. We're gonna check that we're gonna cut to make it $500 again.
Okay. So in this case, let's take a look at my expenses. Was this for advertising?
No.
Was it a bank fee?
No.
What about a business expense?
Could be.
Could be. Next one, freight expense. Obviously not. Insurance.
No.
Interest.
No.
Labor.
No.
Let's see what else. We have license, loss, office supplies. In this case, did they buy office supplies?
A little bit.
Well,
Balloon plates and napkins can be.
okay. Well, not
But
necessarily.
but the food is main.
Payroll, purchase,
No.
rent, utilities, bad debt, depreciation, and amortization. So out of all of these, which one would most likely be it?
We can have it as a business expense.
Yes, because it's a party, right? So in this case, they decided to throw a party and spend money for the business. So in this case, they said, let's just call it a business expense. Okay? Because they don't have a account for meals, okay? Or they don't have an account for party supplies, right? Because again, it's a coffee shop. They're not going to throw parties all the time. So in this case, best one's going to be, well, this is a business expense because they threw a grand opening party, which is considered a write-off for a business expense. Okay, so good. So in this case, you can go ahead and sum all of them up into a business expense. I didn't memorize what business expense was. Business expense was 6,200. Okay. Okay. And what did you say that you have to do?
We need to add up all the total of the receipt.
Okay, so in this case, we got 187.16 plus 23.80
80
plus
and 71.82.
Okay, so I got a grand total of $282.78.
So now we have to cut the check for that amount to make the petty cash $500 again.
Okay, so 282.78.
Yes.
282.78. Okay, and it's going to be June 30th. Who's in charge of the petty cash?
Eileen Jameson.
Mm-hmm.
And note would be to deplenish petty cash fund.
Check number
1536.
1536.
So that goes to the general journal note.
If you want to put in what was the reason why they need to replenish the petty cash drawer because of all the business expenses, it's up to you. In this case, you could put all that information into the actual business expense account itself. Okay. So let's see what's next.
We need to go to the general ledgers and update those two accounts.
Okay. Starting with your expenses here. Here you go, business expenses. Today's the 30th. This is where you can go ahead and indicate what you bought. So in this case, I can write party supplies. For grand opening party. Pizza. Soda, cake, decor, and utensils. $24 now. Okay,
It's 282.78. Yeah, so grand total is 1282.78. And then we go to the asset for checking.
Whoops. Am I on the right one? Yes, I am. Okay. This is your checking account.
282.78. So grand total is now $10,502.39. And I think that's it.
Yes. Right? Because it's an internal transaction. Now it says here that you're going to estimate the allowance for doubtful accounts, okay, based on 5% of accounts receivable balance. So, what does that even mean? If you're estimating 5% of the accounts receivable balance.
We are using allowance method.
Yes, but which allowance method?
Oh, balance sheet method.
Balance sheet method, right? Because we're looking at doing the estimate based on accounts receivable, okay? Not total credit sales, okay? In this case, we never even kept track of our total credit sales. So in this case, we can only use the balance sheet method for the allowance method, okay? So how do I recognize, how do I journalize this estimate, this adjustment? What am I adjusting for?
We are going from account receivable to allowance for doubtful account, and then
Let me ask you this. Do we know who?
no,
Do we know when?
no,
Okay. So
we
there,
just know it 5% of what the balance is.
exactly, right? It's an estimate. So if it's an
Yes.
estimate, which method or which what kind of journal entry are we doing?
Bad debt expense.
The bad debt expense. Good.
That's what your note said.
Yes, bad debt expense. Now, why am I doing a bad debt expense if I haven't had any balance in the allowance for doubtful accounts? You don't have
Because
to have an account balance in the allowance for doubtful accounts. You can do the bad debt expense at any given time because it's an estimated number. It's not a requirement to know exactly how. Where'd they go? Okay, there you go. Yeah, I think something's wrong with my internet. Ah, come on. Hello, are you guys still there?
yes,
Okay. Yeah, so in this case, right, it doesn't matter whether we have a balance in the allowance for doubtful accounts, right? Because that's during the accounting period. Right now, we reach the end of the accounting period. So if I want to adjust this, this is an estimated amount anyway. So whether this 5% does, fault on their payment, which I don't even know who is in this 5%. It could be anybody, right? So far, we know that was it Super A Market and Katie's Coffee Corner already paid off their balances in full, but we still have Great Restaurant and we still have the corner bookstore that still have to make their payments. So in this case, right, it could be one of those two people, right? We could, in this case, it's just an estimated amount, whether we are wrong or right. Okay, so in this case, if I end up again taking the credit, right? What happens is that means when I start my new accounting period, I already have a credit balance. So therefore, if someone decides to fault on their payment, then therefore that's where the balance comes from to begin with. Okay? All right. So if I am going to be debiting my bad debt expense account, what is my equal and opposite credit? What account am I going to use to represent my equal and opposite credit here?
Allowance for doubtful account?
Mm-hmm. Mm-hmm. We cannot use accounts receivable because that's the direct write-off method. We are not tax accountants. So in this case, you can only use the allowance for doubtful accounts method. Okay? And allowance for doubtful accounts is a contra asset account to accounts receivable, 11,100. Okay? Now, how much is 5% of accounts receivable?
We need to go to general ledger to see the balance right now.
Correct. So in this case, we go to the ledger and find out what our account balance is in my accounts receivable account. There you go. Whoops, wrong one. I skipped too far. Okay, accounts receivable is here. Accounts receivable. I currently have a balance of $1,531.95.
So we multiply that by 0.05%.
Okay, and what do you get?
$76.60.
$76.60. Good. Okay. And
Do we just write estimate allowance for doubtful account?
mm-hmm.
Okay.
Okay. All right, here you go. Bad debt expense. Oh, actually, hold on. You want to say this is estimate 5%? 5% of what? Of,
Account receivable.
So A/R is an accounting acronym for accounts receivable. And that's exactly what I'm going to do here is 5%. Which cost me $76.60. And then my allowance for doubtful accounts. And oh, look, it's a credit, right? Because it is a contra account for $76.60. Okay. So, subsidiary ledger or no?
No, because it was internal transaction.
Okay. Now it says we're going to be moving on and we're going to be calculating 1 month's depreciation of the truck. Use mileage. Okay, its mileage is 150,000 miles before it needs to be maintenance. Okay? All right? And of course, no salvage value and useful life is 7 years. And of course, this month we drove a total of 1,200 miles. So, this is where we're going to go ahead and use our depreciation tables. Okay, so here it is. Depreciation tables, however you want to have it. Okay, so in this case, each asset has its items in here. So again, let's go ahead and look for the truck. Here's the truck. Okay, what do I need to know? Oh, I guess, whoops. I must have saved all the answers here. Yes, I did. Okay. Anyways, let's ignore that and start all over. Okay, so we got the truck. All right. Oh, man. Give me 1 second. Let me go ahead and erase everything. Because you guys need to be able to practice all of this. Okay. So, first things first is, where am I going to find the total cost of the asset?
On ledgers.
Ledger. Good. So in this case, that's what we have to do. We're going to have to use our ledger to go and find and identify every single item that's on this list. So in this case, I need to look for my truck. Okay, truck. Truck. Okay, so the truck says I purchased it on the June 8th. And how much did it cost me in grand total?
32,20890.
32,208.90 is my total assets cost. Now, what's the rule of depreciation if I were to purchase it on June 8th?
We claimed the whole month of June as the first month.
Okay, so but in this case, that's good. But when do I actually start depreciating it?
In that month of June.
Well, I meant exactly when. How do I know it's June 8th? Just because I purchased it, that doesn't mean I put into service.
Oh, because that's when we put it in the account for the truck.
Okay, what's the rule what's the rule? When do you start depreciating your any vehicle?
Oh, the 15th before or 15th after?
Okay, I'm not talking about any of that. I'm talking about in general. When do you start depreciating any vehicle?
When it's put into service.
Okay. Well, how
The only way we would know is when we put gas in it, we drove it. That's when it went into service.
well, technically no, because in this case, right?
Would it be the first delivery that was made?
No. Now in this case, right? In most cases, this is exactly true. So let's say, for instance, right, I want to go ahead and return my car. Can I return it for the full price that I purchased it at? Of course, you cannot get your money back. Okay? Why? Because as soon as you drive off the parking lot, you're automatically depreciated. That's the rule. So again, so vehicles, any kind of car that you drive, as soon as you drive off, because in this case, right, every car is gonna have some kind of gas in it when you drive off the parking lot. Okay, sometimes they even let you test drive it too to see how you like it, right? But they won't start charging you the depreciation until you drive off the parking lot. So in this case, the day that I bought it, which was June 8th, is going to be the day that I recognize that I must depreciate it. In this case, right? What's my salvage value?
Zero.
0. Okay? And if I am basing it on miles, which method am I going to be using?
Unit of production.
Units of production. Okay, so in this case, mileage. How many miles is my capacity?
150,000.
Right, before it needs to be maintenance, meaning get an oil change, maybe change out the tires, align the wheels. It can be only driven up to 150,000 miles before you have to start putting parts to it and maintenance it. Now, in this case, for the month of June, how many miles did I drive?
1,200.
You drove 1,200 miles. Okay? So in this case, right, what's my depreciation basis? What's my depreciation basis?
Shoot. We have 7 years on the life of it. And so isn't it the 150,000 divided by the 7 years is what it says for a year?
No.
No, I don't remember. Give me a minute. May, if you remember, jump in and do it.
Okay, so remember, in this case, if it's based on a capacity, that means time is not a factor.
So it's a depreciation basis divided by estimated unit produced. So it's
No, that's not the basis.
oh the basis it would be the price of the truck itself. So it's
No.
no
What's the formula?
cost of asset minus salvage value.
Yes, not just the price, it's asset cost minus salvage value, which in this case, yes, it is the asset cost, but in this case, you have to remember that there's an extra component. Even though there is no salvage value, you have to remember that salvage value is a part of that formula. So it's not just strictly only just the price of the car, okay? But in this case, yes, it's 32,208.90. Okay. Now in this case, what's my depreciation rate?
It's the depreciation basis divided by the estimated unit produced.
Yes, which is which number?
150,000 miles.
150,000 miles. Because what are we doing? We need to figure out how much it's going to cost me per mile. So in this case, out of all 150,000 miles, I need to know what the price is for each and every single mile that I drive. So in this case, I get 0.2147260. Okay? So then what is going to be my depreciation expense?
Miles times depreciation rate.
I'm going to do equal round formula. Okay, so miles times the depreciation rate, comma 2.
257.67.
257.67. Good. And that becomes my accumulated depreciation. So what's my book value going to be?
31,951.23.
Okay. So that means after using it for 1 month, it's now valued at 31,951.23. Okay? Now, so let's go ahead and jump back into our journal. Okay? How do I journalize that I'm going to be calculating all of these usage of my fixed items, my fixed assets? What represents that?
There's an account that says, oh, my brain just went dead. Give me a minute.
It's the for the debt is depreciation expense,
Mm-hmm.
and then for the credit we use accumulated depreciation.
Okay, so in this case, let me go ahead and put this one first. Depreciation expense, 66,000. That is true. You're going to be depreciating for the month of June, so therefore you are going to have depreciation expense. Okay, 66,000. Now you said accumulated depreciation, right? Now
Yeah,
let's take a look. Go ahead.
but uh, we are separating the account for each asset. So as we see on the chart of account, each asset has their contra account for the accumulation
Okay, so in this
accumulated
case,
depreciation account.
so vehicles, truck. My accumulated depreciation for the truck is 1711. Okay, and so far, how much was that?
So depreciation expense is 257.67.
Okay.
And then for the depreciation expense, it's the same for the first month.
Yes, but in this case, you know what I'm going to have you do? Instead of writing every single individual one for the depreciation, because it's going to be depreciation expense and accumulated, right? We all know that that's going to be the same thing, rinse and repeat. So instead of writing every single one separately, I'm going to have you combine them all together because they're all going to go to the same expense account.
Oh, okay.
So in this case, I can stop here for now, and then as I go through every scenario, I can go ahead and plug the numbers in. Okay, so let me see. Let's see what's next. Okay, now it says to calculate 1 month's depreciation for both coffee brewers. Okay, and of course, the first coffee brewer has an estimated remaining life of 3 years, no salvage value. And then the second coffee brewer has an estimated useful life of 5 years, no salvage value. Use straight line. So this one tells you to use straight line. So let's see. Okay, so my coffee brewers. Let me get rid of these real quick so we can do this together. I'm sorry, I thought I had this as a blank sheet. It should have been a blank sheet. Okay. Okay. So in this case, right, we have 2 coffee brewers. Okay. We need to keep them separate because each coffee brewer, what happens to them? They are two separate, they have 2 separate values in regards to the cost, and also secondly, they both are have a different useful life. So in this case, right, first coffee brewer. Do you remember what our first coffee brewer was?
The one we got with cafe.
Yes, so let's go ahead and look that up real quick. So coffee brewer. Okay, so coffee brewer number 1. How much did we purchase that one for?
$1,900.
We purchased that for $1,900. And what date did we put this into service?
June 4th.
Well, no, not necessarily.
Because we bought it on June 4th.
We did not
didn't
buy
open
it
the
on
store.
June 4th. We opened up the store, yes. Okay, if you want to do that, that's fine. If you want to justify it that way too. But usually, rule of thumb is right when you buy it, you should test to see if it works, right? Because you don't know what the previous owner did to that machine. You want to run it as soon as you get it, right? You don't want to wait that long to figure out that you just bought yourself a broken coffee brewer. You want to turn it on immediately. So in this case, you could have taken it home and plugged it in. So in this case, I guess you can do June 4th, but in this case, I would say the day that you bought it, which is May 31st, which in this case, what does that tell me?
The first amount of depreciation in June.
Yes, okay. So then no salvage value, and the first coffee brewer only has an estimated useful life of 3 years. Okay. What about my second coffee brewer? What about my second coffee brewer? How much is my second coffee brewer?
We we paid 27.95, but we got discount
Okay,
on
so
that.
how much is my actual coffee brewer?
So the difference is 2605.29.
Okay, 260529. $2605.29, you said?
Yes.
Okay. And it has an estimated useful life of 5 years, but when did we place this asset into service?
We June 10th.
June 10th. Okay, because again, we got to test to see how the coffee brewer works. We got to know how the coffee brewer works. And on top of that, when we hired Tim, he had to train to use the coffee brewer so he knows how to make the coffees the way he wants to make them. So in this case, we definitely put into service as soon as we bought the item, right? Okay, so what does that tell me? Yeah, do I depreciate for June? Yes or no?
Yes.
Okay.
Because it was before the 15th.
Okay, so let's take a look. Let's go ahead and do the first one. What is my depreciation basis for this one? For the first coffee brewer, right? Because in this case, we were given that it was straight line.
The cost of asset minus salvage value.
Okay, minus salvage value, which is going to give you $1,900. Okay. What's the depreciation basis going to be?
It's 1 divided estimated useful life. But don't we have to divide, but multiply the 5 years by 12 months? Because we are doing a depreciation by month, not by year.
You wouldn't multiply. And on top of that, the first one is not 5 years. It's
Oh,
3 years.
3 years.
Now, you wouldn't multiply by 12.
We divide by 12?
Yes, in this case, you would divide by 12 because you are only depreciating for the month of June. Now, in this case, this is telling me to divide 1900 in a third. That is for a whole year. So in this case, you're going to take that and divide it by 12 to get your monthly depreciation. So in this case, how much is it going to be for the month?
$2.777778. It's 4, 7, and 8.
Can we have 4 sevens and 8s depreciation? What did you say the answer was?
If I do the land, it's 3%.
What's 3%?
Oh, never mind. Haha, I know what I did. Hold on. $52.78.
Mm-hmm. So that's your accumulated. So what's your book value going to be?
$1,847.22.
Good. Okay, so that's just the first coffee brewer. Now we need to figure out what the second coffee brewer is going to be. So in this case, my depreciation basis for the second coffee brewer
2605.29 minus 0. So
Okay.
salvage value
Okay. Depreciation rate.
is what was it? One over estimated useful life.
Mm-hmm.
which is 0.2.
Okay. So what's my depreciation expense going to be for the month of June?
$31.67. No.
No.
I know why. It's 43.42.
Yes. So then what's my book value going to be?
2561.87.
Okay. So in this case, there's my coffee brewers. Now I have one for $52.78, and I have the second one for $43.42. Now, does it tell me that I need to depreciate them and compile them separately, or are they together?
Well, the for the general ledger, they are in one account, so we can put them together.
Yes. So in this case, how much is 52.78 plus $43.42?
$96.20.
$96.20. Good. Okay. So then it also tells you that you need to calculate 1 month of, oh, I think we're just going to do all the tables first and then plug in the answers in the journal later. Okay. So let's go ahead and calculate 1 month's depreciation for the coffee grinder. It has a 5 years life, straight line, no salvage or no residual value. Okay. Okay. Okay, first we got to do is solve for the value of my total for my coffee grinder. Okay, so in this case, my coffee grinder is currently at
41, 45, 57.
Mm-hmm. No salvage value, estimated useful life of 5 years, and when do we actually place it into service?
I believe June 15th.
Yep, June 15. So what does that tell me? Am I going to depreciate for the month of June or no?
So it's after 15, so no.
It has to be on the 15th. So 1 through 15, and then the rest is 16 through whatever, 30 or 31.
Oh, okay. So yes, then we can claim for June.
Yes, because it's the last day that we can claim for June. So in this case, it's a straight line. So what's my depreciation basis?
The asset cost minus salvage, which is the cost asset cost itself.
Mm-hmm. And then what's the rate here?
20%.
Mm-hmm. 1 divided by 5 is 20%. So what's my total depreciation expense for the month of June?
$69.09.
6909. Yes. Therefore, how much is my total book value?
$4,076.48.
Good. Okay. Then it says you are going to depreciate 1 month's worth for the refrigerator, which is 10 years straight line with no residual value. Wait, actually, yeah, with no residual value. Wait, hold on. Did the truck have no residual value there? Yeah, no truck value for the truck. Okay. So in this case, there you go. Refrigerator, 1 month's depreciation, 10 years straight line, no residual value. Okay. So in this case, what was the total value of your refrigerator?
It was 34.95.34.
Good. Okay. No residual value, 10 years life, straight line. Okay. And when did you place into service?
Oh, I didn't look at that. You've got the 14th of June, so that must have been when it was.
Yes, because we purchased it, right? As soon as you
Yeah.
receive it, what are you going to do?
You put it in service
You
and check it.
Yeah, you got to plug it into the wall to make sure it works. But second of all, you need to turn it on because we end up buying coffee creamer that it needs to be in the refrigerator. So in this case, we need to have the refrigerator cold and ready so then we can place it, we can put the coffee creamer in there. So as soon as you get it, you're going to plug into the wall and let the refrigerator get cold. So in this case, you're going to put it into service as the day that you purchased it. All right, so how do we calculate the depreciation basis?
Well, you got the cost minus the salvage value, so it's just the cost.
Okay, so in this case, what's my rate?
1/10, which is 10%.
Okay, so how much much
Um,
is my depreciation
would be
expense?
34.95.
No, do it again, because you
No,
forgot to hold on. So 34.95 is not 10%. That's 1%.
oh, that's
Wait.
true.
So let me see. Sorry, that's 100%. Or actually, I don't know what I'm talking about. So again, let's see. Equal round. You said
Would be
34.
950. 53. 349.53.
Sorry, my formula is just not working today. Equal round. This times this, comma, 2. You said 349.51?
53. 53.
Oh, yeah, 53. Okay.
But
That's for the whole
for
year.
1 month, yeah. So we've got to divide that. Oops. I'm trying to get my calculator out here. So it'll be 29.13.
Okay, do it again. Equal
That's,
round.
yeah.
3,495 times 10% divided by 12, comma 2 is 29.13. Okay. So in this case, what is my
Oh, your value. What value now? Oh, shoot. I can't get it to move out of my way. There we go. Give me just a second. I put in the wrong number. It would be a total of 34.66.21.
good? Okay. Next, it says calculate 1 month's depreciation for the furniture, which are all of them are going to be 7 years life. Actually, wait, sorry, I skipped one. You're going to depreciate 1 month's depreciation for the computer, printer, and cash register. Okay, they all have 5 years life. Okay, this time you're going to be double declining them with no residual value. So let's do one at a time: computer, printer, and then the cash register. Okay. So let's start off with figuring out what the computer was. So in this case, you're going to go to your ledger to locate where your computer is. So how much is your computer?
1834.84.
Mm-hmm.
18,484
Mm-hmm. Now, when did you place into service?
on the 5th of June.
Right. You're going to have to plug it in, set it up, yada, yada. All right. So then, therefore, right, 5 years. We're doing double declining this time, 0 residual value. So in this case, what would be my depreciation basis?
It will be the 1834.84.
Yes, 1834.84. In this case, this is the one where it's the beginning of the year's book value. So the day that you buy it will be the beginning of its book value. So in this case, that will be 1834.84. Okay. What is the rate going to be?
Um, it's going to be 1 divided by 5 times 2.
Yes, twice as much because it's double declining, which means 40%.
And the expense is 73 times around divided by 12. It would be 61.16.
Do that again. Equal round. Oh, I'm missing a number here. And I think I'm on the wrong one. I am on the wrong one. Okay, computer. Okay. You said 6116. Good. Right? And then subtract it out. You'll get 1773.80. I cannot read today. 63. Yes. 68. Okay. All right. 11, 17, 73, 68. Awesome. Okay. So let's go ahead and do the printer. I already started the printer. Okay. The printer, right? It's double declining, meaning it's the asset's life. Okay. And in this case, right, we got the 40% because 1 over 5 times 2. So what is the value of my depreciation expense going to be for my printer?
12.63.
$12.63. So therefore, $12.63. So what is going to be my book value?
366.24.
366.24. Okay. And then we got to do the cash register. Okay. Okay. So in this case, what was the value of my cash register?
The 649.49.
Yeah, so if you looked it up, that's what you're supposed to do. Look it up. 64949. 5 years life, no salvage value. And when did we actually buy the cash register?
6th of June, so we do the full month.
Yep, 6th of June. Okay. So again, depreciation basis is going to be your asset cost. Okay, so what's my depreciation rate?
It's still 1 divided by 5 times 2, so 40%.
Okay. So in this case, what is my total depreciation expense for the month of June?
25.
Okay, 2165. So then, what is my book value going to be?
627.84.
Okay. Okay, so now that I did that, now it's telling me that all my furnitures are going to be 7 years, straight line, and no residual value. Okay, so that means every piece of furniture, so that's starting with my tables. Okay. Okay, so if my tables, right, you look it up, it's going to be 6,605.08, right? The day that we bought it was on June 8th, right? We received it. Now in this case, June 8th, we could set up our tables. They're already set up, right? All you have to do is just arrange them. Not hard, right? Tables and chairs. So in this case, they could be placed into service anytime. Okay? They have 7 years estimated useful life. No salvage value. So in this case, what's my depreciation basis for straight line?
660508.
Yes, because there's no salvage value. Okay. What is my depreciation rate?
0.1428571.
Good. So in this case, what is my depreciation expense for the month?
It would be $78.63.
Okay, good. So therefore, what is my book value?
652645.
Now, since this entire worksheet is already filled, there's no point to keep going on and going through the rest of it. So I do apologize. Again, these were supposed to be blank, so we would practice the depreciation. Okay, so I do apologize for that. Last thing that we have here is since depreciation. Okay, so this case we have one last thing here is to calculate 1 month of amortization for goodwill. In this case, what's amortization?
It's a depreciation for our intangible asset.
Exactly. So in this case, your amortization table is also going to be included in the depreciation table. Okay. So again, if you go ahead and go through it, you're gonna see this is I have the depreciation amortization table for goodwill here. All right. Now, what rule does amortization follow? How do you calculate amortization?
Depreciation base is always equal to the cost of asset because there's no salvage value.
Good.
And then depreciation rate is equal to 1 over estimated useful life.
Good.
And then depreciation expense is depreciation base times depreciation rate.
Yes.
And then and so forth.
Yes. So in this case, this is what I was trying to ask is what is it similar to? It's identical to straight line. Only difference is there's no salvage value. So therefore, the formulas are all the same. Now in this case, I already pre-calculated it for you. Okay. This is what it is for the month, right? Because you have to divide it by 12 for every single month. So you get $11.67. Okay? Oh, sorry about that, guys. So let's go ahead and plug in all of our numbers here. So I'm going to go ahead and start from the very beginning here with our computer. Our computer was 6116. Okay. So in this case, how do I journalize the accumulated depreciation for the computer? Let's see. What is my accumulated depreciation for the table? For the computer.
One 4011.
14011. Might as well also include the printer and the registers. So in this case, 14021 and 14051. They're all cumulative depreciation. It's just at the very end is the actual item that you're looking at. So we have printer and then we have the register. Okay. So what you're going to notice is that you can copy and paste all of these, so then you can just make the minor changes. Okay, so again, you got this, this. And now I can, oh, I should have just, oh well. So we got the computer. We got the printer. And we have the register. Okay, so therefore, 14,011, 14,021, and 14,051. Okay. So my computer was $61.16. What was my printer? How much depreciation for my printer?
1263.
$12.63. What was for my register?
2165.
Okay, so let's see what's next. I have my coffee brewer and coffee grinder. So let's check out what that is in my chart of accounts. Coffee brewer is 1511, and then coffee grinder is 1521.
And the brewer was 9626. That stuck in my head for some reason.
All right, it was 9620. Okay, and the coffee grinders.
6909.
6909. Oops. Okay. Okay, let's see what's next. You got the refrigerator. Oh, I forgot that on the list. Let's see what it is. My refrigerator is 1531. Okay, how much was my refrigerator?
13.
2913. Okay.
Then we'll go to the tables.
Okay, so tables, counters, desk, and shelves. So let's see what those are. We got 1311 for the tables, 1321 for the counter, 1331 for the desk, and then 1341 for the shelves. Okay, so how much for the tables?
78.63.
Okay. How much for the counter?
14.21.
Okay. How much for the desk?
7.84.
And how much for the shelves?
6.87.
Okay. And then we already recorded the truck and Goodwill. You don't depreciate Goodwill, right? We have a separate account for that. Okay, so now
Sum
that
it up.
sum it all up. Awesome.
And I don't have it fast enough, so somebody else can give it to you.
$65508 should be your grand total depreciation expense. Okay. And then
And the account number for amortization thing, I can give that to you too.
okay, so you want to do amortization expense. What account number is that? I think it's 66,500, right?
No, 19,100. No, 19,101.
Okay, that's the accumulated.
Oh, yeah. Shoot, where'd the other one go? Well, put that in the accumulated one while I look up the other one. It is 66,500.
Okay. For how much? How much was the amortization?
Oh, yeah, 1167 in both spots.
Okay. And then description here. Okay. Okay, so now we plug our numbers into our ledger. Okay. Starting with our operating expenses. Okay. So operating expenses, here we are, depreciation expense. Okay, so you can go ahead and you don't have to list them all out, but you could just say all fixed assets for June. Okay. For a grand total of $655.08. I'm also going to go ahead and do the amortization because it's literally right below it. So that way when we plug in all our numbers, it just goes in exactly how we list them all out to be. Okay, so there you go. Amortization for goodwill for June for that $11.67. Okay. And then go to your assets and start listing them one at a time. Okay. So here's your assets one at a time. So starting with the first one here is my depreciation for the truck. So here you go. Accumulated depreciation for the truck. It's up to you. You could say this is just an adjustment. Okay. It's already straightforward when you say amortization for the truck. You don't need to reveal anything other. Okay. This is a credit for
$257.67.
thank you. 257.67.
And then we go to the computer.
Okay, then we go to the computer. Here's the computer. What do you call it? Depreciation expense.
630 adjustment, page 24. Credit for 6116.
Okay. Here you could just
Enter.
scroll down to the printer. Okay, I thought you were moving fast, so that's why I moved fast. Okay,
And
so the
credit
printer.
on that is 1263.
Okay.
And then down to the cash register. 630 adjustment, page 24. Credit of 2165.
Okay.
And then the brewers in the equipment.
There you go.
630 adjustment, page 24. Credit of 9620.
So in this case, for the coffee brewer, since you have two of them, you could list out what they are. So brewer number 1, for instance, was a total of.
Remember them separate.
That's okay. It's just for extra details because this one has two different ones.
Right. There you go.
Okay, so the first one was 5278 and the other one was 4342. Okay, 5278. For a total of 92
9620.
9620. Okay.
And
Then
your
refrigerator.
grinder,
Oh wait,
the
sorry,
grinder.
grinder first. Yes.
630 adjustment, page 24. Credit of 6909. Then the refrigerator.
Yes. Then the refrigerator.
630, adjustment, page 24, credit of 2913.
Then what's after the
Go back
refrigerator?
up to the furniture.
Here
Go
you
to
go.
tables.
Tables and chairs. Here you go.
630, adjustment, page 24, and it is 7863. Your counter, adjustment, page 24, credit of 1421. Down to the desk, adjustment, page 24, credit of $7.84. And then the shelves, 630, adjustment, page 24, and the credit is $6.87. And then clear down at the bottom is the cumulative amortization of goodwill.
There it is. Cumulative amortization. Goodwill.
630, adjustment, and it is 1167.
Okay.
And that has
Awesome. That's all of them. Okay. All right, so it's exactly 3:02. I'm going to round that to 3:05 here. So go ahead and take a 15-minute break.